I don't know what happens short term, but long term, I think you'll see gold much higher. In fact, Michael Oliver is saying within the next 2 weeks he expects silver to take off.
I know.
When we get into September is normally when we start to see prices move, and that would be long after, if there's anything, which is July 4th. If it happens July 4th, you're going to see fireworks immediately. Maybe they'll revalue it to the mark-to-market price.
Yeah,
it should be just the actual price before they revalue it to a much higher level. And Nixon did it 2 years in a row. When gold closed in 71 at $35, he revalued it to 38 in 72 and to 42.22 in 73, both times devaluing the dollar. So could it happen more than once? Sure. At the very least, it should be marked to its market price. Every $4,000 increase gives the Treasury general account $1 trillion free and clear.
Correct. So we would basically be going from a $39 trillion deficit to, at least on the books, down. We'd be cutting it down. I think he said it was roughly around 7 to 8 trillion if we revalued it at that 24,000. Yeah, which is, I don't think that we would. I mean, look, who knows? But that would be life-changing for a whole lot of people.
Gold and silver are moving into a critical phase as inflation, treasury stress, and physical metal shortages continue to pressure the financial system. Andy Schectman, a well-known precious metals expert and president of Miles Franklin, explains why the long-term setup for gold and silver remains extremely bullish. He believes gold could move much higher over time, especially if the U.S. moves toward a gold revaluation strategy. One major point is that every $4,000 increase in gold could add around $1 trillion to the Treasury's balance sheet, creating a powerful incentive for policymakers to mark gold closer to market value. He also discusses scenarios where gold could be revalued to much higher levels, including $7,000, $12,000, or even $24,000. The bigger message is simple: the dollar is weakening, inflation is returning, and physical gold and silver are becoming more important. We're about to dive into highlights from Andy Schectman's interview. Before we begin, make sure to subscribe to the channel and enable notifications so you never miss our latest insights on gold, silver, the economy, and financial markets. Thank you, and enjoy the video.
Trump posted that he wants Fort Knox audited. We went over that.
Yep.
What would that do to gold if it's empty?
It'd go to the moon.
You would be retired. I think that you would just automatically step into
retirement. It would go to the moon, and the U.S. would just be done. They wouldn't.
How many billion? What did they say the ounces in Fort Knox is supposed to be?
8,300 and some metric tons.
Right.
So there's 32,150 ounces in the ton. So I don't know.
It's a lot.
Let's see.
I don't even know. You have to turn your phone the other way to get the answer. You know that, right?
Something like 268 million.
450
something like that.
Times 4,500.
It would be 1 trillion,
right?
208 billion.
There you go. But to answer your question, gold will be a lot higher, I believe.
Yeah. And well, the Treasury market would collapse. The bond prices would go, literally you'd see interest rates go limit up.
And talk about there being probably not a whole lot of gold to be bought at that time would probably be an understatement.
Well, yeah. I mean, the whole thing would go haywire.
Yeah.
When we get into September is normally when we start to see prices move, and that would be long after, if there's anything, which is July 4th. If it happens July 4th, you're going to see fireworks immediately. A lot of people think he will revalue it. I don't know that he'll revalue it all at once like this. I don't know. I mean, they got the new $250 bill coming out.
Yeah,
you saw that it's gold colored.
Yeah.
I don't know if he's going to. Maybe they'll revalue it to the mark-to-market price.
Yeah,
it should be just the actual price before they revalue it to a much higher level. And Nixon did it 2 years in a row. When gold closed in 71 at $35, he revalued it to 38 in 72 and to 42.22 in 73, both times devaluing the dollar. So could it happen more than once? Sure. At the very least, it should be marked to its market price.
Yeah, I was watching, I go to sleep to YouTube every night, watching all the various things. Of course, the other night was Mario Necco, and he was talking about the revaluation.
So basically, you're saying Mario puts you to sleep?
No. Actually, I was
nice
watching Michelle McCoy, and thank you, Michelle. You were beautiful, and everything was spot on as always. And then Mario came on because he's usually 6 hours ahead of us. And I don't sleep, so I catch him right away when he launches it. And he was talking about the revaluation, talking about the amount that the United States can add to their balance sheet and all the various different levels of mark to market, whether it was current spot 4,500, and then of course if we went to 7,000, 12,000, even 24,000, how different the United States balance sheet would look.
Not only that, every $4,000 increase gives the Treasury general account $1 trillion free and clear.
Correct. So we would basically be going from a $39 trillion deficit to, at least on the books, down. We'd be cutting it down. I think he said it was roughly around 7 to 8 trillion if we revalued it at that 24,000. Yeah, which is, I don't think that we would. I mean, look, who knows? Who knows? But that would be life-changing for a whole lot of people. But it would also mean a lot of other things to a lot more people.
I can't even imagine what it would look like. But who's to say? You know, I mean, look, there is no question that Trump is taking the steps to, if he is trying to bring back manufacturing, if he is trying to, you know, have the epicenter of energy here in North America instead of in the Middle East, if he's trying to do all of these things, bring back mining, to give us really what we would need to, you know, in an environment where things are moving rapidly in AI and changing the employment landscape. These are very important things, and he couldn't tell everyone until it's already in place. If he is doing this stuff, God bless him. I mean, he will go down as certainly being a polarizing figure, but if he really did all of this stuff, he would be the best president of all time because of what it would mean to future generations. If it happens, that's, you know, you have the Genius Act, which is backed by the movement of money, will be backed by short-term treasuries. This is why, in essence, Trump has neutered the dual mandate of the Fed. Anytime money moves, it will be backed by 90-day or less treasuries that will pin the front end of the rate of the curve to the floor. So the interest on that, direct interest, is not transferable. Now they're talking about doing rewards and that kind of stuff to, you know, to pay off the holder of the stablecoin, but interest is not transferable. So companies like Tether, who have all of this interest that they have in being the largest purchase, one of the largest purchasers of treasuries, they're buying gold. They've bought more gold than anyone in the world except for Poland the last year. And, you know, that devalues the dollar. That would push gold higher. And if it were being sold to the Treasury, you know, there's that wink, wink, nod, nod moment. This is a guess. But I mean, when you see Bo Hines as the CEO of the new Tether division that is Genius Act compliant, USA Tether, he was Trump's crypto czar. Did they say, here's what's going to happen? Anytime money moves, you're going to take that interest. You're going to buy gold to devalue the dollar so we can sell stuff to the world. Gold will go higher as you continue to buy it, and we'll sell that to the Treasury so that we can peg the back end of the bond market to it. So we have zero upfront borrowing costs on long-dated Treasuries, redeemable in gold. We can bring back and build manufacturing at no upfront borrowing costs, redeem it down the road 20, 30, 50 years in physical gold. And that's when I was talking about Van Eck funds. The mutual fund company came out and said, if the dollar lost reserve status could go to 139,000 an ounce. I'm not saying that. They are. At that rate, how much easier would it be to pay off these massive bond obligations when you sold them at $4,000 an ounce gold or 4,500, but when they come due, it's 139,000 or some much, much higher number? Well, you have to give a fraction of the gold. The dollar gets clobbered, allowing us to bring back manufacturing and sell it to the world. To me, it's the lesser of all of the pain thresholds that we would go through by outright default or hyperinflation. Either way, the dollar's toast. And I think saving in dollars is the dumbest thing you can do right now.
Agreed.
The pressure in the silver market is also becoming impossible to ignore. COMEX silver open interest for July is reported to be far larger than the available registered supply, indicating how tight the physical market has become. At the same time, metal continues to leave major vaulting systems like the LBMA, New York Fed, and COMEX, which points to a growing desire to remove counterparty risk. There is also a strong prediction that silver could begin moving sharply very soon, with Michael Oliver's view that silver may take off within the next 2 weeks. Historically, September is also a period when precious metal prices often begin to move higher. With inflation rising, oil prices under pressure, and investors losing confidence in paper assets, the setup for a major precious metals breakout continues to build. Let's get back to the interview.
Inflation is getting worse, and I expect it to continue to get worse. You have people at Exxon talking about oil being $150 in the next couple of months, and they're very concerned about it. You look at the United States and Japan, and their oil reserves are being bled down to ridiculously low levels on this deal where they're lending out our reserves to be paid back at a later date around the world to mute the effects of all of this. But at the same time, you see gas prices going higher here, and we're bleeding down our strategic stockpile. I don't like that. I don't like that at all. But I think inflation has yet to truly rear its head. People will see it as there's a lag effect. I think it's coming as energy and oil and gasoline are not going to get any less expensive anytime soon.
No, and that's why I think it's kind of funny that we're seeing the metals where they are, because I think that we're in store for a very big bull market in all commodities.
Well, someone thinks it's a good value. So far, the June deliveries, which just commenced a couple of days ago, we're up to 2.449 million, almost 2.5 million ounces, which I just did the math on it. It was 11,023,650,000 so far has been delivered so far in June. And silver is at 9.215 million ounces. Let's do the math on that. That's roughly $691 million so far in an off delivery month. So, the deliveries continue.
Well, the thing that got me was when I sent you that information, I thought maybe I was reading it wrong.
Which one?
On the July open interest.
That was July.
It's July.
Oh.
July open interest was 70.9 thousand contracts, which equates to 366 million ounces.
That's more than they have totally.
That's 4.6 times the current amount that's in the registered at COMEX. So that's a big number. What is DT? Am I not August? Oil shortage is coming?
Despite the oil shortage.
That was good. Way to go. That's very good.
Hang around me long enough
Yeah.
to figure it out.
Yeah. I'll figure something out.
I mean, I think that's the thing that we're supposed to believe that, it's going to hurt the economy. No question. You're going to see much higher inflation, and they're not going to lower rates. But again, what that really, really signals more than anything, with rates that are not going down, in fact, long-term rates going higher, is the world sees the strain. The big money around the world who holds our treasury sees the strain that this will have on our capital markets, on our debt market, on the bond market, selling treasuries now and replacing it with gold. Ultimately, gold goes much higher. I think the hard thing to do is to look at it from a prism of a couple of months.
Agreed.
I think you need to look at it out further, and what this will do is reignite inflation substantially. It's going to hurt the economy. It's going to hurt the dollar. And I ultimately don't know what happens short term, but long term, I think you'll see gold much higher. In fact, Michael Oliver is saying within the next 2 weeks he expects silver to take off.
I know.
It's one of the things you're seeing with all the metal leave the LBMA, all the metal leave the New York Fed, and whoever's taking metal out of COMEX, it's removal of counterparty risk. There is a lot to be said for that, and I will tell you, he's completely authentic. So I think you take it for what it is and add it to the other things that you have that you've been reading and listening to, and make up your own opinion. Because really, peace of mind and sleep at night is the best asset you can own.
Which I mean, I agree 1,000% with what you said. Everything that you just said. I just think that there are certain circumstances that are somewhat out of your control. I mean, somebody who has a lofty IRA and they want to be in metals because they no longer trust the equities market or the dollar. What are they to do? Well, I mean, if you're a 52-year-old guy or gal and you want to take the money out, you're now looking at a 10% penalty, full tax on the distribution that you take out.
Well, that's the old statement, hope for the best, prepare for the worst, best you possibly can.
Yeah.
Do what you can within the confines that you're thrust into, I guess.
But you do what you can. I mean, look, it's great to have all your metal on you. But I mean, Andy and I told you last week, we went and we made a deposit into Brinks, and you know what? I still have plenty here, but I felt great.
Well, these people aren't on a podcast telling people to buy gold.
Yeah,
it's better if you own gold as someone like owns a metal company or speaking online. Holding it at home is silly, probably.
Yeah, I mean, we live.
Most people don't tell people,
Yeah.
right? Since March 30th, the lows, 70% of the S&P's 500 gains have come from just 10 names. At times, the majority of stocks have moved in the opposite direction entirely. So you also have the S&P in relation to the Dow Jones at the lowest, the Dow in relation to the S&P at the lowest level ever. But that tells you the Dow are the big legacy stocks that represent the economy. They are way, way low, all-time lows forever in like 100+ years, forever against the S&P, meaning that the S&P are all these new tech stocks, whereas the stocks that would represent the economy, both in the S&P 500, the 490 stocks under the 10 are collapsing, but the Dow Jones, which are the fundamental stocks, at its lowest level of the S&P, which is being held up by 10 stocks, really 7, it's not a good sign, and it's not a good sign for the broader economy.
Yeah, the breadth of the market is horrendous. Is basically what
market has halitosis.
Yeah, that is true. It does. It stinks. So, will gold, which you possess, does it have to be converted to dollars to buy something? An ounce of gold is too much to buy a loaf of bread.
So that's where you will see a change in this industry regarding tokenization, and that's coming, and that will democratize, kind of more like Glint. It'll democratize the ability for people. The World Gold Council has written a white paper on tokenization of gold, and their theory is that there are too many things that do not communicate to one another in that space. They're not interoperable, and their idea is to kind of be the plumbing of the system where all of the gold tokens like PAX, like Tether, and others that you will see in the near future will speak to one another and be interoperable and deliverable and all of these things. And yes, Miles Franklin has talked with those in the space and is contributing ideas, and you never know where things end up. But I think that the market is moving in that direction to a degree, if you look at it more as a payment vehicle, something that you can use in that respect. I don't think you'll see, look, if you look at the way the laws in Texas and Florida are set up, that's exactly what you would do. You would deposit gold eagles into an account at the, at a state-run depository, and they would somehow account for what you spent. Now, you're not going to spend in equal 1 ounces. So what does that mean? I'm not sure how they plan on doing that, but it is in a way to open up the utility and make it spendable without receiving change back. And that, the law says you can trade gold eagles or silver eagles if the shop owner wants to take it, but making change is not easy. So they ultimately will marry blockchain technology and vault technology with an app on your phone so that you can unlock it. It's coming for sure.
It is definitely coming. I mean, there's no question about it.
These discussion points to a much deeper shift than a normal gold and silver rally. The real story is about confidence in the dollar, pressure in the bond market, and the growing role of physical metals in the global financial system. If the U.S. continues moving toward gold revaluation, stablecoin-backed Treasury demand, and dollar devaluation strategies, gold could become a central part of the next monetary reset. Andy also highlights how gold tokenization and state-backed depositories could make precious metals more useful in daily transactions. This means gold and silver may no longer be only long-term stores of value, but could become part of a new payment and settlement system. The key takeaway is that saving in dollars may become increasingly risky as inflation, debt, and monetary stress continue to grow. Physical gold and silver remain positioned as a form of protection against this uncertainty. We'd love to hear your perspective on the ideas shared in this interview. Leave a comment below and join the conversation. If you enjoyed this video and found value in the analysis, please like, subscribe, and click the notification bell to stay updated with future content. Thank you for watching, and we'll see you in the next video.